Low interest rates and an influx of alternative financing sources are just two of the many things that are affecting private equity deals right now. Here to discuss trends in this space is Paul Aversano, Managing Director at Alvarez Marsal. Paul, thanks so much for being here today.
Thanks for having me.
Of course. We want to talk about buyers in the PE space. What trends are you guys seeing take hold?
Sure. Well, with our private equity clients at Alvarez Marsal, what we're seeing is a lot of the residual effects still of the financial crisis. Many of our clients basically sat on the sidelines during the financial crisis, 09, 010, not transacting per se. As a result, they've gotten further along in the timeline of their fund before deploying capital relative to where they are in the capital that's been deployed. As a result, they are kind of working towards catching up and matching sort of the capital deployed to the life cycle or lifetime of the fund. And that is driving many folks to causing pressure to transact in the market. So one of the main things I would say that are driving private equity buyers today is the need to deploy capital. Just last week, the Private Equity Growth Council released their 2014 Private Equity Trends Report, citing a 17% increase in callable capital reserves, or i.e. dry powder, to almost $500 billion. And when you leverage that and put a leverage multiple on it, you essentially have over $1 trillion of buying power residing in private equity today. So that's a lot of capital that really needs to be deployed, and it's driving up valuations and really driving private equity deal activity on the buy side in the market today.
Great. So now looking on the flip side, what trends are you guys seeing for sellers?
On the sell side, it's not dissimilar. You have many private equity funds that essentially sat on the sidelines during the financial crisis as well when it came to selling their portfolio companies. Last time I checked, some of the data showed that I think we had almost a record holding period of private equity portfolio companies, almost 5.5 years, which the typical holding period for a private equity portfolio company historically has been in a 3 to 5 year time period. Similarly, the Private Equity Growth Council showed a 35% increase in exits from 2013 to 2014 on the sell side. So you're seeing an increase in realizations. But what's driving that is similar to what we said on the buy side. Essentially, you have private equity funds that need to, show realizations and positive returns so they can go back out to their limited partner base and do new fundraising and raise new funds, but also to show a certain amount of capital that's been deployed in the current fund before they're legally allowed under their fund documents to essentially raise the next fund. So you have pressure, a lot of the same attributes that are really driving pressure to people to buy and deploy capital on one side are also causing similar actions on the sell side. And that is what driving up multiples and driving up private equity deal activity in the United States.
Okay, excellent. So one thing that's really been dominating headlines and people have been talking about a lot is low interest rates.
Mm-hmm.
Looking ahead, how do you think that low interest rates are going to continue to affect the M&A market?
Well, it's tough to say. The Fed has been talking about the word patience in some of its releases. Certain people are handicapping a June interest rate increase. Some are saying September. Not really sure. My view, and what we're seeing with our clients at Alvarez Marsal, I don't think it's going to have an immediate impact. I think we're coming out of a zero sort of interest rate period. I think we'll have to have a significant amount of rate increases to get that to a point where it becomes material. I think what you'll see are large cap or the larger transactions first impacted as a result, because you're just purely by the amount of leverage that they're using, that a smaller move in the rate will have a greater impact. I think so it'll take a while and it'll take a period of time. I think you won't see any impact materially until 2016. And at that point, I do believe that the larger transactions, the larger cap deals will get impacted first, and then we'll see it trickle down into the middle market.
Okay, excellent. Well, thanks so much for sharing all this information with us. The deal will definitely be tracking these things as they progress in the PE space.
Great, thank you.
Thanks. In New York with The Deal, I'm Kelsey Butler.